Your accounting software company is 10 years old. Customers still renew. Support still clears tickets. The roadmap is packed. From the inside, it does not feel like failure. And that is exactly why this hurts. You built something real. People depend on it. So why does growth feel stuck? Why do newer tools steal the story while your product still does the work? You are not asking whether you can survive. You are asking what restores durable growth without betting everything you built on a total rebuild. In your leadership room, the debate keeps collapsing into two options: rewrite everything, or sprinkle AI on top and hope the market finally notices. Both feel like action. Both soothe the fear that you are falling behind, and both can burn years you do not have to waste. Because the quieter truth is not that your software is old. It is that your software is broad enough to demo and too generic to become anyone's default. You have felt that gap. The deck looks complete. The feature list looks serious. But buyers do not leave a product that owns their worst weekly pain. When you do not own that pain, every competitor looks like a threat. Every request feels urgent. Your roadmap becomes a mirror of whoever shouted last. You blame age. You blame missing features. You blame the stack. Underneath it, you already know the pattern. You have customers, cash flow, and activity. And almost no beachhead you can defend. This is the plateau you are living on. Renewals keep the lights on, so the crisis never quite arrives. Your product team gathers requests from the loudest accounts. Marketing still says all in one. Sales wins a logo here and there by matching a competitor checklist. Inside, everyone is exhausted from being busy. Outside, the curve is flat. That exhaustion is not laziness. It is the emotional cost of fighting everywhere and winning nowhere. Competitors do not need to beat you at everything. They only need to become the obvious answer for one painful job: multi-entity close, firm-side review, inventory-heavy books, nonprofit reporting. Any workflow buyers will pay to stop fighting. Your product may still work. It just no longer owns a job. And that is a lonely place for a company that once felt inevitable. Once you name it, the traps are familiar because you have touched most of them. Feature sprawl. You copy competitors instead of deepening a paid workflow. UI theater. You reskin screens while close, reconcile, and filing still hurt. Acquisition addiction. You celebrate new logos while retention quietly bleeds. Channel neglect. You treat accountants like users instead of the people who could carry you into the next 100 accounts. Rewrite roulette. You start a multi-year rebuild with no beachhead revenue plan, hoping the new stack will heal a strategy problem. None of this means your team is weak. It means motion got confused with strategy. Each trap dilutes focus. Together, they make a 10-year-old product feel obsolete, even while customers still depend on you. That mix of pride and dread is the real emotion of a mature product company. You can stay on the feature race, every quarter another module, longer demos, heavier implementations, thinner differentiation. You win the checklist and lose the feeling of being chosen. Or you choose a narrower default. You become indispensable for one paid workflow and one buyer you understand in your bones. Support, onboarding, integrations, and packaging all reinforce that niche. Your sales team stops chasing every RFP like oxygen. Expansion comes from seats, entities, and adjacent jobs inside accounts that already trust you. One path collects demo wins. The other collects switching costs. Only one compounds. And only one gives you back the feeling that the market needs you specifically, not accounting software in general. Part of you will push back, and you should. Niche focus is not a spell. If you are missing tax coverage, bank feeds, payroll adjacency, or the integrations your buyers treat as oxygen, a beautiful niche story will not close the deal. Platform power is real. Compliance breadth can be non-negotiable. Capital is finite. Cut the wrong thing and you shrink instead of heal. So this is not narrow, always beats broad. This is harder and more honest, unfocused breadth, with no default workflow and no retention discipline, rarely restores growth in a product as mature as yours. Here is the turn that stings, because it asks you to choose. Your comeback is usually not ship more, and it is not rewrite first. It is becoming the default in a beachhead niche, then modernizing the jobs that drive renewals and expansion before you buy more acquisition. Your age is survivable. Being undifferentiated is not. Weak expansion motion is not. AI can help you. Document capture, categorization, anomaly flags, support deflection. But AI is leverage on a focused system, not a costume for an unfocused one. The uncomfortable reveal is this. If everything on your roadmap remains equally important, nothing you build becomes defensible. Relief starts when you finally cut. Your sequence can be concrete. Write one beachhead sentence: who you serve, which workflow you own, and why you are the default. Choose a small set of workflow bets that improve renewals and expansion, not vanity screens that calm anxiety for a week. Instrument retention, logos, revenue, expansion, and confront the churn drivers you have been too polite to name. Rebuild accountant and partner distribution as a growth motion, not a side errand. Apply AI where it shortens time to value inside the beachhead. Rewrite can still come. Let it follow revenue focus. Do not let it replace the hard emotional work of deciding what you are willing to be known for. In the next 90 days, make it personal and measurable. Put your niche sentence on the homepage and in the sales script until it feels true in your mouth. Choose 3 workflow bets tied to renewal or expansion. Stand up a simple net revenue retention view and name the top churn causes out loud in the room. Launch one partner or accountant pilot with real enablement. Test packaging so your beachhead is easy to buy and adjacent jobs are easy to grow into. Then kill roadmap items that do not serve that beachhead, even the ones that feel like safety blankets. Busy is not the goal. Being someone's default again is the goal. That is where pride returns. Say the niche sentence out loud today. Who do you serve? What job do you own? And why are you the default? If your stomach tightens, you are close to the truth. Share the hardest part. Churn, channel, rewrite pressure, or AI theater. And we will dig into the next operator problem from there. Subscribe if you want turnaround playbooks that respect what you have already built. Tell the truth about trade-offs. And skip the miracle relaunch fantasy. Bring your real constraints into the comments. That honesty is how the next operator chapter gets useful for founders like you.